Welcome everyone to the Bneaux Real Estate Show. I'm David Bneaux from Caldwell Banker Realty, and I'm here with Mac Humphrey, the game changer.
That's what we're trying to do.
We're
gonna do
man?
it. No, we're not trying no more. It's either like Yoda said, you either do or you do not.
Right,
so we
right.
change the game. We change the game.
We game changers. So,
Yeah.
we're going to be doing a sort of a series here, kind of just get everybody through the door. How do we get a house? What's the process to get in the house? So we're going to do a whole series of videos. So just listen to us every week or every other week, and we're going to put it out there for you to listen to, and we can, hopefully we can help you out, get you in the home.
Yeah, just give you some knowledge, and that's the thing. Knowledge is power.
Absolutely.
Instead of just going or push button, get mortgage, all that stuff, know a little bit about what you're getting into so you can have the right questions. And then if you get with the right mortgage professional, hopefully it's me, but
right.
if it's the right one, they're going to guide you and they're going to show you all the different programs you might be qualified for, as opposed to just saying, hey, you got to do this type of loan.
And most of the time what happens is from my clients, or even probably from your past clients, they call me and say, I'm ready to get a house, Dave. Right. It's time. I'm tired of renting, tired of paying that money. Mm-hmm. Every year or two they try to bump up my rent.
Right.
And and they ready. They ready to get a house. So I said, well, the first thing we need to do is go get the money.
Right.
So we need to get the money. So what I want to talk about today is the different type of loans that's out there for our clients to get. Yeah. That's like FHA, VA, conventional, USDA, jumbo loan, right. VA, all those. So I want you to talk a little bit about each one of them, some of the misconceptions. I'm sure they have some. Yeah. So I want you to talk a little bit about that, because when I first came into business, they always told me you need 20% down to get a house. And we know that's not true, right?
No, you can get in with as little as zero down.
So I'm going to have you talk a little bit about that so we can educate our spirit out here.
Well, one thing, I'm happy to be on here again and able to give some of this knowledge, because it's no good in having it all up here and not sharing it, right?
Absolutely.
There's too many people out there that think they cannot buy, and they absolutely can. Okay. We just need to bring them in, put them on a plan. The other thing I think you do exceptionally well is you're telling them, we got to get the money first.
Yes.
Because most clients come and they go, I want to go look at houses.
Yeah.
Well, in this market, you can't go look at a house without already having the money. So with that said, there are really 5 different types of loans that I normally will determine whether or not a client is suitable for.
Okay.
That's your VA loan, which is going to be for your veterans.
Right.
You have your USDA, which is more rural, but with Colorado, rural is actually coming closer into the cities now. So it still works that way. You have your FHA. Mm-hmm. Okay. That usually first-time home buyers will use that a lot, and it's not because that is the first-time home buyer program. It's just that it has a lower down payment amount, so it has minimum down payment. Then you're going to have, as we said, VA, USDA, FHA. Conventional that's the one that most people think, hey, I need to have 20% down to do conventional.
Right, okay.
Not actually true. You can actually do a conventional loan with as little as 3% down. Okay. Then you have your jumbo loans. Your jumbo loans, those now are going to be your higher price point loans, and that is where your clients are usually going to have to come in with that 20%.
Well, that's the $1 million home, $2 million homes.
Anything above like 684, 9 or something like that.
Okay.
So anything above that is considered jumbo. There's some, and now I'll work backwards. So with jumbo, you're going to have some of your guidelines are going to be a little bit stricter.
Okay.
Such as things that we'll talk about in this series, like DTI, debt to income ratio.
Right, right.
And then you have your conventional, again, going to have some stricter guidelines for you. Higher credit scores, lower debt to income ratios, stuff like that. Then you have your FHA, kind of working backwards. Thank God I can remember what I said. You have your FHA, where FHA is really, really conducive to your first-time home buyer, because most first-time home buyers may have a little bit more debt because they haven't had to pay a mortgage. So if you didn't have to pay a mortgage, you probably have created more debt in other areas. So it allows for higher debt to income ratios.
Okay.
Also, it allows for lower credit scores. So you can get down into that 620, and even some go down to 580. They aren't the easiest to do because they become like a manual underwrite.
Okay.
And that's something I want to share out there, because I know a lot of consumers / even real estate professionals go, hey, well, you can still do an FHA loan down to 580. Well, you can. But I'll tell every one of my clients that wants to go down that road, it's not going to be the easiest of processes.
It's not an easy process.
It's easier for me to help somebody get their credit score to a 620 than to have them go through the underwriting process at a 580. Okay. And then you have your, I missed one in there, VA. VA, one of my favorites because I am a part of several veteran communities. Me not being a veteran, but actually more than half my family are veterans, so I really love VA.
Okay.
I always throw that out there because I'm a VA guy.
and great products out there.
Great products,
yeah. Man. I'm telling you that I don't think they ever pay nothing, man.
Well,
after time I'm closing with
them. 100% financing.
Right.
You know, they'll allow you to go to higher debt ratios. They really want to help soldiers get into homes.
Great.
That's what their whole goal is. You know, you could have had a really bad stint with your credit 5 years ago, and as long as you've paid it on time, all your credit stuff on time for the past 12 months, they're not even that strict about credit score. So it really is based on what this borrower is doing over the past 12 months.
Okay.
You know, to get in. So those are the 5 main loans that I'm determining whether or not my clients are suitable for.
Okay.
And what's best for them.
Okay. On the real estate side of it, the two that you was talking about, FHA and the VA, even though, you know, you're talking about 100% financing, low down payment, they have some, you know, a lot of times, especially in the seller's market, it's a little bit tougher.
I already know where you're going.
It's just a little bit tougher to sell, you know, to get your client that's a buyer on the contract due to, on the seller side, if I'm on the seller side, I want a conventional, I want people putting down a little bit more money.
Yeah. And that part is tough only because it's an education thing.
Yes. Okay? Yes, it is.
So, at least for me, as a lender, it's very important that I pick up the phone and talk to that listing agent.
Absolutely.
Because, you know, I hate to say this, but it's kind of like, hey, some folks will see VA and go, oh, well, I don't want to do that. That's not as strong as a buyer. That's actually your strongest buyer. Believe it or not, that's your strongest buyer. Because that's like, if I went to you and said, hey, you work for this company and you have insurance, and then you take your insurance card and you go to the doctor and the doctor goes, no, we can't take care of you. Right. You'd be, well, no, I pay insurance and I can get taken care of. Well, that's really what VA is. The VA has said, hey, because you've done this, we gave you that, and as long as you're approved by your lender, we are giving you the money. It's guaranteed.
Right.
So it's actually one of the strongest loans, but it takes education. There's this misnomer around the seller has to pay all these other costs for the buyer, and that's not true.
Well, the issue you have more so on the real estate side of it, when we dealing with buyers, they have the appraisal.
Yeah.
And on the appraisal, they're a little bit more stickier on making sure the house is up to speed.
Yeah,
and I agree. The FHA and the VA, they're a little bit more stricter. Like you can't have peel and paint.
Yeah.
On the FHA, you can't have peel and paint. Yeah. On VA too.
Well, VA, they'll be a little bit more lenient on it. They may. So big thing for them. Yeah, depends on
who the appraiser person is
and lenders and things like that. But the one thing that they really care about is health and safety.
Right.
So it's all health and safety. So if there's, you know, little things like a door lock missing, you got to be prepared to tell that seller, hey, you got to replace it. Now with conventional, they may not care anything about that, you know.
Or exposed wood.
All those different things.
Exposed wood and FHA and VA, they want that to be taken care of prior to closing, which is very understandable to me.
Yeah.
You know, because they really asking, you know, the basic necessity. But now these days, because it's a seller's market.
Yeah, they're like, well, I don't want to do anything.
I don't want to do anything.
I want to get top dollar, and I don't want to do anything.
Exactly.
Yeah, and that's in those cases. You know, maybe it's how we structure the contract. Maybe those items. Maybe it's some way to get them to go ahead and take care of it, but maybe they increase the purchase price by a little bit. I don't know. When
it's
comes
always
to that.
ways to work around,
right?
And that's something that you talk to your client individually
Yeah.
about.
Yeah.
But I just kind of want to educate our clients that's out there.
Yeah,
right now,
and I think that's you bring up a really valid point about kind of the communication that has to be involved in this.
A lot of communication.
A lot of communication. The realtor and lender synergy has to be there, because in that very scenario you just said, you have to call me and go, hey, or I have to call you and say, hey, you want to look out for this, or hey, we're going into this house and I noticed this. Is it going to be a problem?
Right.
And then you don't waste your client's time.
Absolutely.
Because it's nothing worse than taking them out there, right? And they go fall in love with this place, and you know that it's not going to pass.
Right.
Certain inspections. So, USDA is another one we should bring up too, because yes, it is going to be a little bit tighter on debt to income ratios. They will not budge above 43. However, it is a 100% financing program for those who aren't even VA. The government set that one up just like they did VA, just without the higher debt ratio.
And
so
that's agriculture, correct?
it's technically agricultural, but there are areas in Thornton, there's areas all over. There's areas that even run right into Denver that qualify for it.
Really?
Yeah, there's a map. There's a USDA map. So what we have to do on all our properties is go in and hit the button, make sure that see if it's in that area, and if it's in that area.
Okay.
You know.
Okay.